Welcome everyone to another 144 and 360, where we try and show you how to use the Fibonacci retracements based on the 144 rules and guidelines. In this one here, we're going to go over a little bit more about the 78.6% retracement and what to expect from it, and some examples of exactly what did happen in the markets and what we think can happen. We're going to go over the 10-year note and the May soybeans. So first of all, about 3 months ago, we did a video where it was just after the 10-year note made a bottom back in October, then retested it in November and held a 78.6% retracement. Now, what we're going to show you here is the exact same thing happening both on the small scale and then on the major scale. So we'll go back here. First of all, we'll go back to the high for the contract back in 2020. And then, as you can see here, we hit 23% back to this high from the 2022 low. Now, keep that in mind there, what that level is, and we'll come back out here to what is just what happened right here. So the last leg down, and how we follow how the markets are, how weak or how strong they are, is we just take this level here and we see that a market that hit 23% we know should go make new lows. And here's the thing about how we follow the retracements, and it's just not a one-time thing. It's not like if it holds, great. If not, oh well. It's you should know something if they work and if they don't. So there are guidelines as to what it should be doing when it holds it, and then if not. So in this case, 23.6% should have sent us to new lows. Okay, so and any market that doesn't should then send it to 38.2% of that same move. So just dissecting it down a little bit more, we take this level here, and this thing's really big. So you can see that 78.6 was what this market held. And we've said this many times that this is the area you really have to watch for, both up on top and down below of these markets, when they can what can really turn a market. One, we know that 23% not making a new low should send us higher, and two, the fact that 78.6 holds should send us at least 78.6% the other way, and can be the end of the whole down move. In this case, it happened to be the end of the down move for the time being as we rally up into here. This was eventually what took us up to 23%, as we just mentioned, back up to the 2020 high. And you can even see here in a much smaller scale. Let me just do something here real quick so we can get these numbers reduced. We take the retracement. Even in here, we know it already hit 23%, and it should be going for new lows. But then again, we see that the rally, the attempt at the rally here, let's get this right, held 23% in here and then failed to make the new high. So the reverse of what happened down here is what we're looking at up here. Hit a major retracement, then went and hit a smaller retracement, then could only go 78.6 back the other way, and that was the end of this rally and down. But we knew that was coming, or we thought it was coming, because we hit 23.6%. Now this took us all the way down to 78.6%. Again, 23% should have sent us to new lows, and as we always say, we watch every retracement on every move to see just how weak or strong a market is. And in this case, you can see that this market just blew through every retracement on the way back down after the 23, 38 nothing, 50, 61.8, and then here we hold 78.6. Now again, what's the target? Well, 78.6 the other way is the initial target. It could also be the end of this whole thing, and for two reasons, the target up above would be 38% if this level gets taken out. So initially we basically hit the first target here of 78.6 the other way, and you see just a lot of wicked moves come from these retracements. Just as it did down here, you see these big spikes up, and in the reverse up here where you see the spikes down. So if there's one retracement you really want to see that can change a trend, that's it. The ones that keep the trend intact are your 23.6 and 38.2. So as we said, if we're looking here, if this is to come back down and we just stay in a trading range, we'll be looking for 111 right around here, 78.6% retracement the other way, and everything still in the major picture looks negative, but yet has the potential to turn higher, just based on the fact that the 23.6% failed to take out the previous low, also came at 78.6. This could be the end of the move down in the big picture, and also that by not from 23 not making that new low can send us all the way up here to 120, 121 area. So now we'll look at the beans here in the May, and we have to go to the daily chart on this, and just in kind of the same, not the same, but the same levels that were hit here, we can see that this market has gotten stronger and stronger each time, holding a tighter and tighter retracement on the way up. But what we have here right now is we've been hitting a lot of 78.6 levels up in here, and which has caused just a trading range, sideways trading range. And right now this 78.6, it held 23.6, had one close below it, got right back above it. We always want to see two below it to violate that level. What we did get here was 78.6 back of this high and this low, and when that happens, it's, as we said, one of two things. It can either be that we just go 78.6 the other way, which is right here, and we're looking at a 1492 on the downside from the 1534. That would just keep everything extremely positive, and you know, in this tight trading range that they've been up here for, you know, for all of this year so far. This 78.6 level should just send us right back up towards the highs again, and keeps, as I said, everything pretty positive. As far as what happens on the downside, we'd like you to become a weekly grain subscriber, premium member. We send out a weekly update every week, and it shows you everything where we think the market can go based on the Fibonacci retracements and the Gann squares, which are the yellow horizontal lines on each of these charts that you've been seeing. And we hope that you'll continue to watch these videos and keep looking for our next one. And again, thank you for watching, and please subscribe or give us a thumbs up. We'd appreciate it.